help businesses succeed, and not just succeed in any way, or do a lot of pain point support, but help you figure out a valid business model that can take you to the next level. What that means is we do strategy, we do coaching, we do business mentorship. We offer all kinds of support so that you can survive. Sometimes we do it alone, and sometimes we do it with development partners, including Family Bank as one of our support development partners who are willing to help SMEs survive and thrive. Wild has done this with over 20,000 businesses so far, and I'm still counting because that is not our final number. So we urge you also to, reach out, check our website, see what Wild is about, and see how you can plug in, and we'll be able to assist you. But today is all about you guys, the audience, to help you grow your financial management as organizations. So this now takes me to the next segue of what today is all about, which is basically listening to the experts. And the agenda will flow as such, whereby once I'm done with the introductions of the panelists, I will give Family Bank a chance to tell us more about themselves and the services that they've been offering to SMEs and anything else on asset finance. We'll then invite our expert, who will take at least 40 minutes thereabout, to talk about financial management for SMEs. And he's going to talk about the practical tools that make you a better person when it comes to money matters or money management within your organization, bookkeeping, etc., etc. Then from there, we'll open it up to Q&A. For the participants. We'll still have just a few minutes in between the presentation from the expert, where we can, just for the sake of even getting a breather, tackle 2 or 3 questions that might have come up while he was doing his presentation. And then I will open up to the wider participants, whereby you can still share your questions and he'll be able to answer. Don't limit yourself. You can ask any question, you can pose the question towards the expert, to Family Bank, to the strategy expert that is us, being Wild, and definitely will be able to answer. And then from there, we'll close the session, hoping that you've come out having learned something or gained something useful for your business. And then we can open up for a vote of thanks from Jackie, who will be representing Family Bank. So I hope that is sufficient for the 1.5 hours that we have been slotted by the team. Yes, no, yes, you can just put in a comment in the chat. That's sufficient. Do you want more? Because there'll definitely be more. Probably not today, but there'll definitely be more. Okay. Not getting any responses from the chat, but please utilize the chat. Any comment, any questions, any concerns, please share them on the chat and we'll be able to address them accordingly. All right, so now I want to introduce my beautiful panel. It's a panel of 2 well-known gentlemen in their own fields. They come highly respected. So that means I also respect them very, very, very much. I've interacted with each one of them in different capacities. So I'll start with our guy from where I work, that is at the Sandbox. In fact, I even forgot to mention that while this part of the Sandbox, for those who don't know, it's spelled as SNDBX. Sandbox is a consortium or a one-stop shop where different experts within the business community are housed, and they play a common goal, which is basically to support organizations in their quest for success. So if you have a few pain point areas that you have, be it legal, be it financial, be it whatever, marketing, digital marketing, there's an expert that is readily available for you to help you with the needs that you have. So we also have, we have Probity, which is one of the other experts at the Sandbox community. And Probity is going to be represented by the CEO and the founder, the principal partner, who is an accountant and a consultant. and he's been providing support in accounting and finance for organizations for many years now. And he helps businesses basically maintain proper accounting records, use the financial information to make informed business decisions. So today is one of those opportunities where you get to have this knowledge for free. Thomas is also an entrepreneur. Even by virtue of him being an expert at Sandbox, it means that he is also an SME. So he understands the needs of businesses, him being a businessman himself. Thomas has assisted so many organizations in creating accounting processes, Wild included, that have worked for them and have provided accurate and timely data for compliance and decision-making. He's passionate about building capacity in SMEs for efficiency and growth. And, you know, he's a seasoned accountant. So, you know what, according to your books, this is a lot of creative accounting. Yeah, and but he'll help you find a solution. So karibu sana, I'm Thomas. So he will be the expert for the day. We're going to talk about the key topics on financial management. And I hope you're going to also honor him with your time, with your attention. The other person that we have is Daniel Azenga. Daniel, just 1 second, I was looking for your profile because I don't want to underestimate your level of expertise. My goodness, I cannot find it. Cynthia, could you help me?
Okay, just give me a minute.
Okay. Because it's not there.
Oh, as I look for it, maybe there was a question in the comment. I don't know if you can take a question, but differentiating between micro, maybe.
Okay, from Pamela, I can see.
Yes.
I don't want to assume, but it's a she, yes, Pamela. You'll be able to classify small, micro, and medium enterprises. I'm sure the expert is going to share that, and also just give a difference in terms of how to do financial management depending on how big or small the business is. So definitely, I'm sure Thomas is going to tackle that. So Daniel, I really wanted to give you a powerful introduction where everybody would be like, aha, if I'm not working with this guy, then I'm probably lost. So when you get a chance to talk about Family Bank, then perhaps then you can share more about your skills, your experience, and all the value that you have been bringing to SMEs for the years you have been working with the banking industry. So guys, with that, I think we'll just proceed because I can see even more people have joined in, and you're also as pumped up as I am to learn more. So we'll just quickly get to the next phase of today's webinar, which is Daniel himself telling us about who he is and what Family Bank is all about. So Daniel, over to you.
Thank you, Faustina. I believe I'm audible enough.
Yes, you are.
Great. So our key guests for today are our esteemed customers, the business community logged in today. Ladies and gentlemen, good morning. It's a perfect morning today, and I must begin by thanking each and every Family Bank customer and new to business customer present here for taking time to converge with us. I would like to welcome you all to this customer learning session. Today is a family day of conversations, an opportunity for us to interact with you, listen to you as you listen to us. an opportunity for all of us to learn. As a bank, we're cognizant of the ever-changing business landscape, especially in the bustling business environment. As such, we have been deliberate in diversifying and tailor-making our products across every business. We have made effort to support you as you seek to keep up with this changing business environment. And you might ask, so how are we doing this? So we support our customers regardless of the size of the business. Businesses in auto spares, border, mama mboga businesses, cereals, electronics, building and construction, cosmetics, stationery and printing, school equipment and uniforms, hawkers wear, household items, transport, and hospitality, just to name a few of the businesses that we are supporting. We're also supporting businesses in the trade, businesses in both import and export, businesses in the water sector, agribusiness, women-owned and women-led businesses, and those specializing in innovations within the climate and green sector. This financial support is evident to the growth of our loan book, which increased to Kenya shillings 84.7 billion in the first half of this year. So in addition to access to credit, we're also providing technical assistance for the sustainability of your businesses. So ladies and gentlemen, we're more than just a bank. We are family. We would like to work with you through the various seasons of life and grow with you as a trusted business partner. Family Bank is committed to keep innovating and driving value to the ecosystem. I'm particularly thankful to all my colleagues, the area managers and the branch managers that I know support you fully in your respective branches. I hope you take advantage of this opportunity to interact with us, get to know what more we have in store for your businesses. Let us be your business partner of choice. Our sleeves are folded to continue serving you even better. So with that allow me to now reintroduce myself and just give you a quick highlight of who Daniel Azenga is. So Daniel Azenga is a subject matter expert both within the asset financing space and within the SME space. I've had quite a bit of experience dealing within both sectors, and there's a wealth of knowledge that we want to share with you today. So you can be sure that you're in great hands, and we really hope that you can learn as much as possible from this particular session. So this juncture, I'll hand it over back to Faustina so that we can get on to the learning. Thank you very much.
Thank you, Daniel. Very short and simple about him. If he had have given me that job, I'm telling you, would have spent 5 minutes learning about Daniel. Hata mali anaishi, shosho yake anaitwaje. But thank you so much, Daniel. For my audience, we've heard who Daniel is. We've heard about Family Bank and the fact that they support almost every business. There are no limitations to who can, gain from them, who can, find value from Family Bank. Whether you're a border guy, whether it is the mama mboga, it doesn't matter. So thank you for that introduction, Daniel. It was very nice. So we're going to move to the next person, which is basically the expert. And just a quick comment for the sake of the audience to know is that there's a prize at the end of this session. And I can't say what the price is right now. Therefore, you need to pay as much attention as possible. There'll be a short trivia in between the presentation that the expert is going to make. And the lucky three, the first 3 people to actually answer correctly are going to win that a fantastic prize that I think every business person needs in their life. Yeah. So now to our expert, Mr. Thomas from Probity. I think right now you've been enabled to share your screen because it's a presentation. And then for the sake of the audience, if you have any questions as he moves along, please feel free to share them on the chat. We are noting them down and we will be able to address them as we go on, right?
Thank you, Faustina. Much appreciated. When you did the introduction, I actually was looking forward to meeting Thomas. So thank you so much for that. I believe you can actually see what is on the screen. And today we are going to look at financial management essentials for SMEs. For a long time, many people have thought that financial management is for large businesses, is for the bank, is for family bank, is for other bigger institutions that we know probably like listed on the stock exchange and all that. But financial management is for all, regardless of size. And financial management actually starts from the individual point. You actually need to do some level of financial management as an individual. And then even for businesses, from the onset and all through the life cycle of the business, financial management is a key essential tool for movement and for growth. And therefore today we'll see that. Just a little bit about Probity Consult, the organization that I represent and I work for, founded in 2013, Kenyan-owned and management consultancy entity. And we deal primarily with SMEs. We also have NGO clientele and some corporate sector clientele for different things. And we pride ourselves in being partners. We say we are partners, and we don't just say it, but we are partners with our clients in their journey as they walk through this. We offer outsourced accounting services, accounting automation, financial management, payroll administration and automation, tax compliance, budgeting and projection forecasting, all those finance-related services that a business would need to be able to move on. We are able to offer those. And then we are the accounting and financial management expert at the Sandbox, as Faustina well put out there. Sandbox, she explained, Sandbox is a business growth accelerator. So I will not go into that, but you're welcome to actually look at that. So I think we can go straight in to, first of all, a definition of what financial management is. What do the books say financial management is? What do the experts of finance say financial management is? And financial management refers to applying management concepts, the concepts of budgeting, forecasting, managing, and controlling a firm's resources. Now, every organization has resources that it uses. So the financial resources are actually governed around through the process of financial management. And the aim is to maximize an investor's profit. Most businesses that are out there, they are out for a profit. And therefore, to be able to maximize this, we use processes within financial management that will guide how we use these financial resources that we have. So it deals with all the areas connected to profitability, expenses, credit, cash, and we'll see that. And in the small pictorial there, you can actually see that financial management subsets include budgeting, managing, forecasting, supervising, and all this work together as a cog. And the aim is to maximize profit at the end of the day. I have been asked many times, what is the difference between financial management and accounting? And I would actually like to take us through this quickly. I've been asked questions of, can we do financial management without having to do the accounting, or we just want to focus on accounting? So the key differences between financial management and accounting, if you look at the definition, financial management is an application of general managerial principles. So you actually see from that definition, it straddles past accountants. It straddles to everybody working in the business. So financial management is a process that is undertaken by everybody working in the business, not just the accountants. And you see, accounting, on the other hand, is a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting, and then communicating the financial information. So that's accounting. That's what the accountants are trained to do, and that's what they do. But my financial management then is for the entire business. When you look at the objectives of the two, financial management is geared at maximization of wealth, maximization of profit and value. Whereas accounting, the objective of an accounting, the end result of it, the end game is to report financial information. When you look at importance, financial management will help you utilize assets and resources of an organization effectively, whereas accounting will help you report financial information. And this will use standard procedures that have been agreed on and are used across the globe, so that if you're looking at a business's accounts, a business that is run in China, or a business that is run in Kenya, or a business that is run in Zambia, when you look at the accounts, you can be able to interpret them all in the same way, because they are done using standard procedures and principles to help us understand them in that way. When you look at when these two functions happen, financial management is a continuous process. Once the business starts, financial management starts with it, and it's supposed to run with it all the way to the end of that business, if the business ever ends. However, accounting, on the other hand, is periodic. So you find that accounting will have cycles, we'll have weekly cycles, we'll have monthly cycles, quarterly, yearly. That's why we do books and close them on a monthly basis. We report for a month, we report for a quarter, we report for the year. We do our taxes for those same periods, monthly, yearly, and that kind of thing. So that's a big difference in the two of them. The focus area, again, very key. Financial management focuses on the future, whereas accounting is historical looking. It deals with past transactions, things that happened. How did we perform last week? Accounting will be able to give you the facts around that. How did we perform last month? Accounting will give you the facts around that. But if you want to figure out how do we expect to perform in the future, how do we expect to perform in the next 3 months, now you have to bring in some financial management processes to help you be able to do that. When you look at the outputs of the two, financial management's output is analysis of financial information and forecasts that are forward pointing. Yet accounting will give you financial statements based on past performance. That's why we report on last month, we report on last quarter, we report on last year. And then again, the basis, this is a little technical, the basis on which the two are done. Financial management is done on a cash basis. We are dealing with cash matters. We want to know cash coming in, cash that's going out, how much will be coming in, how much will be going out. Will we have deficits or surpluses? Where do we need to borrow? How do we need to bridge gaps? Whereas accounting, on the other hand, is done on what we call an accrual basis. So here we look at what we have incurred, what we have experienced already. So we have made a sale, but it's a credit sale. We have not received the cash, but we record it as a sale. But in financial management, we want to deal exactly with the cash that we are handling, or we anticipate to handle. So key differences. And many organizations are already doing accounting. Actually, most organizations will be doing accounting in one shape or another. However, we need to move to the point where now we start doing financial management for our businesses. And financial management cannot be done independently of accounting, because it uses accounting information to actually be able now to run the financial management processes. So if you have any accounting information in your business that you're already generating, it means that then you're a good and prime candidate for financial management. You can start planning and making decisions based on data and information that your business is generating. So we will look at 6 key elements of financial management today. And these key elements will include separating your business from yourself. We will look at maintaining proper books of account, understanding your tax obligations, budgeting and planning, We will look at analyzing performance and taking appropriate or corrective action. And we will also look at managing cash flows. These are just the 6 basic things in financial management that if you employ in your business are guaranteed to turn your business in a direction for the better. They put you in better control of the business. They put you in a better place in the business to be able to steer and navigate what comes towards the business or against the business. And you're just left in a place whereby you're able to actually make decisions that are correct and in good time. So when we talk about separating yourself from the business, we are talking about a business registration. We are talking about a form of registration for the business that will make it unique. And we have different forms of registrations that happen. We have businesses that run as sole proprietors. We have businesses that run as limited companies. We have businesses that run as partnerships. We have companies limited by guarantee. We have different forms of organizations that you could register and that you could run. From the limited companies, we have private limited companies and we have public companies. And these are kind of the areas that a lawyer or even just a business consultant will be able to help you understand what would be the best way to have your business registered. However, we see as businesses start, especially when they start very small, most of them start as sole proprietorships. Some of the people do not even register a business name to actually try and separate the business from themselves. But it is very important that the first thing you do with a business is that you separate it from yourself in the area of registration. Then the next step becomes now separating the workings of the business from your own personal affairs. And this is where Family Bank comes in very handy, where they help you open up a bank account for the business that is separate from your personal bank account and any other accounts that you need to handle cash or the transactions of the business. You need to be able not to mix business income, business expenditure with personal. That's the first line of separation. That's the first line of accounting. And again, we'll see that's the first line of financial management. So it is important that you separate that so that then the finances of the two can actually, of the business can be maintained well. This is when your accountant comes in to put together the accounts for a period. And then they're not trying to separate what was personal in the bank account from what is business related. And even for you, then it's very easy to track what is happening along the way. When cash is available, you don't have to try and figure out, is it personal cash? Is it business cash? And therefore, you don't end up using business cash for personal uses and that kind of thing. Then you also need to understand the obligations of each business registration type. The ones I mentioned, the sole proprietorship, the public, the private limited company, the public limited company, the partnership, all these come with different types of obligations. One from a statutory perspective and two from a taxation perspective. It is very important to understand what those obligations of each are before you go into them, or if you're already in there and you're not established, then it is good to establish what are the obligations for each. You will find that the ones that you will have obligations at the company registry, where you have to do annual returns for companies, for partnerships. And then you will also have now tax obligations for all the types of, from the sole proprietor to the limited company through the partnership. Each of them has tax obligations. How the taxes are handled for each of them is different in certain aspects of taxation and similar in others. But it is important that as you separate yourself from your business, you understand the obligations of each business type so that then you go for what is most appropriate for your business, and one that you will be able to meet the obligations in a comfortable manner so that you're never in default. Pillar number 2 that we want to look at is maintaining proper books of account. Questions that I get asked a lot of the time is that accountants are expensive. It is difficult. We keep our records how we want, and we've done that in the past and everything. What I always respond, and say is that it is more costly to your business not to have an accountant. So you don't necessarily need to have an expensive accountant, but you need accounting services for your business, which you can actually then have in-house, provided in-house by an accountant that you have hired, or you can outsource it to an accountant who periodically comes in and helps you in this area. So maintaining proper books of accounts involves documenting transactions, and this is from primary source documents, as we call them, which will be your invoices, your receipts, your bank statements, your contracts. All the documents that are involved in the business need to be recorded at some point, and in accounting information. We talk about procedures and processes, accounting standards that are there to guide us in how we record this. So it is important that, first of all transactions for your business are documented. Now, we are cognizant of the fact that there are certain expenses that you will incur, that there will be no receipt that will be issued to you or document. The boda guy will come and make a delivery for your business, or move you yourself or one of your staff members from one point to another, and you make the payment by M-Pesa and no document exchanges hands. It's important that then you come up with a system where you actually create documentation for that, which can be petty cash vouchers or vouchers of any kind, that you can actually record those transactions so that then they don't get missed out, and they can be accounted for adequately and easily. So the next step that happens in this area of maintaining proper books account is posting transactions. This is recording the transactions in accounting format. So we encourage entrepreneurs, and especially the smaller businesses that may not have an accountant within their business throughout the time, and probably they have a periodic one who comes in after so long, is that they record their own transactions in certain formats. And then the accountant now is able to convert this into accounting format. Now, one of the other things you could do, and we highly recommend, is automating your records. Today, we have a lot of accounting systems available, cloud-based, so you actually do not need to invest in high-end computers to be able to download them. You can access them from your mobile phone, you can access them from your tab, you can access them from any computer that you're able to use, because they're cloud-based. All you need is internet connectivity and a paid subscription. You'll be able then to access them and record your accounting data in it, your accounting information. They are easy to use because they guide you through doing the basic things, probably raising invoices, receiving payments from your clients or and paying out your suppliers. And then they do the back-end work for you. They generate some basic reports for you that you would be able to see and to use. So it is important that you consider automating. Regardless of your level, you will find a system that will be able to provide you with the service that you need at your level and at the cost that you're able to meet for that. And then the end output of proper books of accounts is proper financial statements. So what a basic financial statements contain is a profit and loss account, also known as an income and expenditure account, a balance sheet, a debtor's aged listing, a creditor's aged listing. Now, these are basic reports that any business needs to look at periodically. And periodically here is at the longest period after every month. You must be able to look at this. You must be able to know what's happening in the business. And without these basic statements, you will only be thinking, this is what the business is doing, or this is happening, but it will not be factual. So it is very, very important that you have these basic financial statements, which are the products of the accounting process that happens in your business. So if you have an accountant and you do not get any reports from them, it is important that you have the conversation about getting a profit and loss account, a balance sheet, and aged debtors and creditors listings on a periodic basis that suits your business, because this will help you understand what has happened, and therefore this is the position of the business. And then it will help you now engage the mindset and the gears for financial management that will then help you use this information to start moving into planning and taking either corrective action or appropriate action. You will identify things that are working well, and you will then be able to make decisions and take actions that will help you do them even more. The third pillar is understanding your tax obligations. And I can't overemphasize this, but as we have all seen in the last couple of months, tax is becoming a big thing. It has always been a big thing, but it's becoming a bigger thing. And I always say it is cheaper to be compliant than to try and sort out your tax arrears or issues down the road. However, if they're there with you, then you can't bury your head in the sand, and you need. So every form of a business has one or more tax obligations. From the sole proprietor, they all have a tax obligation. Every kind of business that runs has a tax obligation. So it is important that you identify what these tax obligations are. Your accountant may help you on this, or speaking to one or even your fellow business people will be able to help you understand what your tax obligations are for your registration and for your business. Then once you establish what taxes your business is due for, then you establish what we call a compliance status. You identify and establish what is your compliance status. Have you been calculating these taxes correctly? Have you been remitting them on time? So you establish what your compliance status is. And if then you establish that you have arrears in certain areas, experts, accountants, we will help you there to help you establish and even prioritize how to go about dealing with those. There are some that you may not be able to deal with in one immediately, and probably you need a plan, you need to know a way of going about it. So it all starts with a financial management plan to actually plan cash, to plan and see how you place those obligations in your time frame of the business, and then see then how then you go about them and do them with a way, in a manner that then limits the tax exposure you have in form of penalties and interest. And then we also talk about tax planning. It is important to go beyond just understanding your tax obligations and paying what comes your way, but planning, looking at your business and trying to establish through financial management where you're going. What taxes are you anticipating? How much are those taxes I'm anticipating? Why are we incurring taxes at that level? Is there anything we can do to either run our transactions in a different way, and then either have some obligations not falling upon us because transactions are structured in certain ways, or how do we actually plan for that? That is called tax planning. Now, tax planning can be done for you by your accountant who has a good understanding of the Income Tax Act, and will be able then to tell you these are the areas that your business, based on your registration and based on the kind of transactions that you run, these are the areas that you can then be able to take advantage of the Income Tax Act and incur less tax by doing certain things in certain ways here. So that we call tax planning. It's a way of avoiding unnecessary taxes, and not evading tax, but avoiding taxes that you could actually not have to pay by doing certain things in certain ways. So understand your tax obligations, very important at all levels of business. Then we also talk about budgeting and planning. And now this is where we actually now move from the forte of accounting and now start planting feet in the area of financial management. Some businesses are very good at this, of creating a formal budget, and they do this in the course of the year as they try to plan for the next period or the next year that is coming up. So they go ahead and they put together a budget, and they actually know this is what we are targeting, this is what we are doing, we're planning to do in the next periods, in the next year. But unfortunately, for most organizations, that's where it ends. They do the budgeting process, they come up with a budget, the budget gets approved, and it gets put in a file, and it gets kept away. We need to use that budget as a tool to help guide us in how we are making progress. So the steps that you'd use in creating this budget is one, forecasting your sales. And usually we talk of a budget for a year. So you forecast your annual sales and then break it down into monthly sales. And then also you forecast these sales by product or by service that you sell. And so you actually come up with a plan of this is what we would like to sell or have our turnover as for the coming year. And then you determine your input or production costs. If you're actually dealing with goods that you actually produce, add some value and sell. So you determine your raw material costs for the sales that you want to make. You determine your labor costs and other overheads based on that sales forecast. Now, this you can also do for a service-based business. When you come up with how much you want to raise in revenues for services that you are actually offering, then you are also able to determine the costs of offering those services based on your current accounting. So again, we see that financial management is hinged to accounting. Without accounting, you cannot do financial management, as financial management borrows from the data that comes from accounting. Then you look at your other expenses that your business incurs, and you forecast those for the following year. And those would be marketing, sales costs, would be administrative costs, financing costs. You have borrowed, or you probably are looking forward to borrowing money from the bank. So you need to actually be able to establish how much does that cost me, and be able now to focus that and put it in your plan. And as you will see, this forecast again is taking the shape of what we call a profit and loss account. So basically our forecast here, we're trying to forecast what our profit and loss account for the next period will be, for the next year is going to be. And once you do that, then what we find most businesses then not doing, and what we really help businesses do, is tracking your actual performance on a periodic basis against what was planned. So this is where you look at your accountant, or as a business, you have prepared your accounts for the month of August. And then we go back to the plan that we had made earlier for the month of August, and we tabulate the two against each other. So we look for variances, both positive variances and negative variances. We look at what was our planned sale against our actual sales achieved. We look at what was the target expenses against the actual expenses incurred, and we identify variances. Now, these variances are the ones that help us now start taking action, which will either be corrective or appropriate action. Now, corrective action will be where you find that you're falling short of the targets, and now you have to re-strategize and establish new ways or things that you need to do different to be able to meet those targets. So you had a sales target of 300,000 shillings in the month of August, but you only ended up achieving 220,000. So you have a negative variance of 80. So what do we do to be able then to increase sales so that we then meet those targets? So you start making corrective actions around sales. And the same thing for expenses. If you have overrun some expenses, then you come with actions of what do we need to do differently so that then we reduce the expenditure. However, we also have positive variances. You have targeted a sales of 300,000 in the month, and you have achieved 350,000 in that month. So you have a positive variance of 50. So again, you introspect and you look and ask, what was the cause of us exceeding the target? So there could be various things. It could be possibly that you are just under budgeted, or there are things that happened in the marketplace that enabled you to do that. Probably your marketing and your sales team employed new tactics, or they were more strategic in what they did. you had more salespeople doing this, you had put more effort into business development and many other things. So you identify those things. And the idea for identifying them is that so you can take now appropriate action of either embedding those actions in the things and the processes that you do, so that then you can achieve more positive variances going forward. It is effective. It's a very effective tool of management, and financial management actually starts with budgeting and planning, and then comparing the results of what you get from actual performance, which is financial reports from accounting, with your plan. And that's the most basic level of financial management. So one of the things that we always say is that, and point out, is that a budget rarely matches your actual results, but it does provide a starting point for business management. So we say even for a startup business, you need a budget. You need to dream, you need to plan, and have something that you're actually chasing, something that you're actually targeting. And then as the business runs, now you have more information, real information of the business that helps you now make this plan in a more realistic manner. So it will never match your actual results, but it actually then provides a guide on where you should be at and the direction that you should be going.
Thomas, thank you so much. I want kindly request to allow us to take a 1 or 2 minute break by addressing a couple of questions, and then
okay,
issue presentation. Is that okay?
That is well in order, Faustina.
Yeah, but there's a lot of comments that I can see on the chat in praise of Thomas and his wealth of experience in financial management. So you can tap yourself on the back.
Thank you.
You're saying a lot of very, very useful things, and the feedback just speaks for itself. And we have a couple of questions that were shared, but I will just ask 2 of them as a way of just getting a breather for the audience. So there was one question which was in terms of how could you help them understand currency depreciation aspect for costing. You actually, when you were starting your presentation, the key thing you said was we are in a very dark season, and that word currency has made it even darker. So perhaps you could answer that, and then the second question, that will be the only other question I'll ask for now, then the rest we can share later on, is the tools. You have mentioned it's good to automate. You need to have tools so that it gives you a clearer picture of where you are financially, a health check of the business, where you are financially. So there were 3 different sets of questions, but they're all talking about the same. Which apps can we use? That was from Zilani. Carol was asking which cloud-based solutions could you recommend? And Odo was also asking, Elaine was asking if Odo is is an efficient tool for SMEs. So they're all touching on tools, and maybe you can answer that.
Okay, thank you, Faustina. I will attempt to answer this to the best that I can. I'll start with the one about currency and depreciation. And this is one area that has hit businesses hard. For those businesses, especially that generate their revenue in a local currency, in Kenya shillings, but require inputs that they have to spend forex, dollars, pounds, euros, and other key currencies in that. So we have seen such businesses take a big hit. And yet on the flip side, we have seen the businesses that earn revenues in those foreign currencies and yet operate here, meaning they have expenditure in Kenya shillings. We have those now recording a lot of good upside. So it just depends on which side of the divide you are on. But for most of us who are on the side where now we are taking the hit on depreciation, Again, I must re-emphasize the planning and financial management. This is one of the tools that will help you be able to manage this. So you find that the Kenya shilling has been depreciating against the key local global currencies consistently over time. And so what that actually means is that whatever you're supplying to the market, to your customers, your clients, is getting more and more expensive for you to supply, especially where you have inputs that come in dollars. You're spending more shillings to get the same $1 than you were spending some period back. So it is important, one, to be able, through the financial management planning forecast or the budgeting, to go and adjust your budgets now for currency devaluation. So if you have a plan and you're looking at, say, Q4 of this year, you're looking at your sales, you know that your inputs are coming in dollars. This would be a good time to go in, look at those plans, and then just move the exchange rate higher and see what then that means for the business from a plan perspective. You will see it will erode your margins, your gross profits and that. So then you need to early enough start making decisions around, do we increase prices? What expenses are we incurring that we then can reduce here and there? Are there the things that we buy, whatever we import, are we able to hedge some of these rates and lock them early enough? What kind of conversations then do I need to start having with my bank? What conversations can I go, for example, and have with Family Bank about purchase of dollars? Can I be able to forward purchase some currency that will see me through for the month, and that so that I can lock a rate for this month? So those are the kind of things that financial management will help you be able to do, to be able to actually simulate and see how the decline in exchange rate will affect you going down. Again, it is a budget. It doesn't match the actual results you will get, but it will give you an indication. And then it will help you start making decisions on when either you have to increase prices or when you then need to do certain things, introduce new products that then cost less to produce, or services that offering your services in a way that it costs less to actually give them unto the clients. However, if exchange is on the flip side for you, it is giving you an upside, you're earning in foreign currency, this is a good time now to also start investing out and putting out whatever gains that you're making, or actually investing that money into growing the business and making the business better for going forward. On the other question of automation tools, I talked about automation, and it's one of the things that I'm very passionate about when it comes to accounting, because it is what moves accounting from the accountant only into the entrepreneur's hands. It brings you into control. It gives you visibility of the business and transactions. It gives you a seat to be able to actually plan for your business. So we have many apps that are available today that are cloud-based. Most of them are subscription-based. Some of the common ones you may have heard about for accounting is QuickBooks, which has been with us in the market for arguably the longest or very long. We have a company called Zoho that does Zoho Books and other tools that go with it. We have Xero as an accounting tool, for example. We have FreshBooks. Somebody talked about Odoo. Odoo is also an ERP that is out there, actually, that gives you a larger, broad spectrum, not just accounting, but being able to do other things on your business. But the thing I always say with accounting platforms, before you settle for any accounting software, talk to an expert who will be able to help you, one, establish what your needs are from each of these platforms, and then be able to point you at the ones that are most appropriate for your business, so that then you make a decision. Don't make a decision because you had one software is working so well for somebody else. Find out what are the needs of your business, from a data collection perspective, a data processing and analysis perspective, and reporting. What kind of reporting are you looking for from this system? What are you looking for to do with this information? And then establish the systems that are able to give you that, establish their costs, how they will fit in your organization. Now, these tools have interacted with many of them, and some of them are purely accountants tools. If you do not have an accounting and an understanding of accounting, you may not be able to use them effectively. And others are built as business tools. They're accounting tools, but built as business tools, meaning that without an understanding of accounting, you can be able to log into them and interact and actually run transactions and some reports to some good level. So you need to be able to have somebody help you assess your business needs and match that against the different tools then before you invest or you procure or you subscribe into any of these tools. So all of them, I don't condemn any of them. They are good, but you must get what is a match and a fit for your business.
Thank you. Thank you for those responses. They're very direct and quite practical. That is the best part about working with someone in the accounting industry. We're very direct with your responses. So I hope that answers the questions on currency. And a quick emphasis from what Thomas has said is it depends on which side of the divide you play. If you paid in USD, better for you. But if you buy inputs in USD, well, it's a whole different ballgame. And Thomas has given us very good practical examples on how to manage that, how to do hedging, so that at least your FX numbers are reasonable enough for you to be able to attain profitability. With regards to tools, again, thank you so much for such a sufficient response. In any case, none of the panelists here is running any tool, but the thing is, take a tool that works for you, just as a reminder, take a tool that works for you and fits within your business needs or the industry that you work with. So thank you for that, Thomas. I'll give you 10 seconds, Thomas, to have a glass of water, and then you can come back and continue with your presentation. Just 10 seconds.
Thank you.
For the rest of the guys, I can see more questions streaming in. We're going to share them. We're going to open it up. We're going to open the session up for Thomas and the Family Bank team and even myself to respond to any questions that you might have. So we'll also take advantage of the fact that Thomas has been given a break to also have a glass of water, a bathroom break, and then we will continue from there. Okay, so we're just waiting for Thomas to come back. He finishes his presentation, so he'll only have another 10 minutes or less to finish his presentation, so that we can give our audience the chance to have their burning issues responded to. So Thomas, back to you.
Thank you, Faustina. Appreciated. Yes, be done in 10 minutes or less. The last two keys is one is analyzing your performance and taking appropriate or corrective action. We have talked a little about that. Again, now we see how we have moved from accounting information and now we are using it to help understand our business. So you need to start understanding as a business owner or as an employee in a business, you need, as an entrepreneur, you need to start understanding some key metrics around the business numbers. Gross profit margin, you need to be able to tell what your gross profit margins are. And then you need to look at this regularly. And that's why we say periodically. So on a monthly basis, you need to look at the performance of the business that period, look at gross profit margin. And then when you compare that with net profit margin, if your net profit is positive, it means most likely that your gross profit margin is sitting in a good place. But this helps you start planning and start knowing that if my gross profit margin, for example, is 60%, then it is able to cover the expenses that we have for the business. So then you start looking for ways and things that you can do to ensure that you always meet a 60% gross profit margin. This could be a different number based on different businesses, and therefore analyzing this on a periodic, say monthly basis is what helps you be able to identify what is the spot or the level that you should be sitting at. So then you understand what net profit is in your business. We have questions. I get a lot of questions from business owners. They tell me, we made a profit. We made a profit of so much, of 500,000 last year. But when I look at the bank account, we don't even have money to pay anything. That 500,000 is not there. So what happened? Have we had fraud? Have we had theft and that? Now, understanding these metrics helps you understand and interpret the different statements that you get, so that when you have net profit margin, you will have another statement, which is your balance sheet and your cash flow analysis, which will help you now understand where that 500,000 is. Yes, you made a profit, but that money may not be sitting in the bank. That money could be sitting in inventory. It could be sitting with your debtors or in other places, and all those statements help you. Then we have ratios like a current ratio. And a current ratio is basically comparing your current assets and your current liabilities. And this is just a very key and easy measure of figuring out whether you're liquid, whether your business is able to meet its short-term obligations on time. So if your current assets exceed your current liabilities, it means that in the short term, you can be able to pay your obligations. And even when you go to the bank and you want to borrow, these are some of the metrics they'll be looking at. They'll be looking, if we lend to this business, what will their current ratio be? Will they be in a place where they're able to meet the obligation or not? So they'll also advise you on some of these ratios that you need to be able to understand and do. Look at your debt ratios. This is looking at equity in the business against borrowed money, debt. And you always want to keep this at worst at a 1-1 scenario where your equity equals to the borrowings that you have actually made. If your equity or the money owned by the business is more than what is borrowed, better, because it also gives you leeway to borrow as and when you need to get that money to help you in your business for different things, which could be for growth, for meeting some cash working capital requirements. It could be for procuring assets into the business and anyways. And even the bank will also help you manage those ratios, because then where you need to borrow for growth, they are able to then channel you and tell you, is it asset finance that you need, which will then not grow your debt ratios, or is it a term loan that you need that then will also now grow your debt ratios. So they'll be able to guide you on the different ways in which you can manage those ratios. Then you look at inventory turnover ratios. And for those who especially deal with goods, you need to be able to tell how many times you're able to turn over your inventory when you buy. So basically trying to become as efficient as you can by buying and or producing and selling in so many cycles that then you do not stock everything that you need to sell for the month. So are you able then, say, to produce for a week, turn it around, sell it, collect the money as you produce for the next week, rather than at the beginning of the month, you have stocked enough inventory for the entire month. So inventory turnover ratio will help you understand that and be able to manage that better. Then you also look at your return on assets. You have invested in assets in a business, and you want to look at the profitability of the business against those assets. So it actually tells you how well you're sweating your assets. Are they generating enough return for you? So when you look at these ratios, the first time you calculate it, it may not make much sense. But after you've calculated a period of time and you're comparing, then you can actually start seeing a direction your business is taking. And you can take the right actions to channel it into the right decision, into the right direction. So this analysis is part of financial management. It comes from information we already produce in accounting. However, most of the businesses and entrepreneurs do not use this information to have this understanding. And yet, this is basic financial understanding for every entrepreneur. You do not have to be an accountant to do this. But as an entrepreneur, it is important that you understand these margins, these ratios, and therefore, because your business will actually speak to you in this language, and then you will be able to know what it requires. And then we'll also look at, talk about managing cash flow. At the end of the day, cash flow is king for businesses. And in today's economy, actually, not just today's economy, it has always been that cash flow is king. Those businesses that are able to have cash are able to make it through a lot of the places. So you use the data from the steps that we've been talking about in accounting and in the other financial management areas to manage your cash flows. So now you prepare a schedule of expected cash flow, which is cash coming in, cash going out. You remember when we looked at the table of the differences between financial management and accounting, one of the things we talked about, the last thing, is that financial management is done on a cash basis and accounting is done on an accruals basis. So this is where now you come and project your cash that you're expecting to come in, which is sales that you're expecting to do and collect, cash sales and credit sales. And for credit sales, you show the collections coming in in the periods that you expect to collect them. And then what are your obligations from a cash perspective? What do you need to pay? Salaries, taxes, rent, raw materials, moving costs, fuel, electricity, internet connectivity, all those. So you project out when you will be expected to pay those. And then at the end of each period, you will have either a deficit or a surplus. And so financial management now is trying to deal with the deficits and the surpluses that you have in that projection early enough. So you could actually do one for a few months, and it's actually showing that in your first 3 months, you will have a deficit of cash. And then you will start building surpluses at some point later. So financial management then will help you understand that you actually need to do something to help bridge your business through those first 3 months. So you need to establish how much cash you will need. And this is then the time that then you start having a conversation with Family Bank or whoever else then is able now to help you with that area. And say, we need bridging financing for our working capital for the next 3 months. This is how much we need. What do we need to do? And we share those projections, and then they're able to help you bridge that gap. But also then looking at the areas now where you have surpluses, and then now being able now to put those surpluses out and saving them for those days or those months or periods that then you will have future deficits, so that then you start evening out those deficits using your internal resources, not borrowing. Now, when you have those surpluses, this is again now when you speak to the bank and find out what product do they have that you can actually pack those monies in, and they can actually earn you some interest or help you in some future period with that. So cash flow is very critical, that we focused this out, that we manage it. And it's basically a schedule, just as basic as preparing a schedule of cash expected in and cash expected out by date, by when is this expected in and when is it expected out. Usually we suggest do it on a monthly basis, do it on months. And then as you progress, you should be able then to break it out into weeks. And then you should be able then now to manage your cash flow on a weekly basis. I mean, for many entrepreneurs, it becomes a lot of help if they know that in 3 weeks' time, we need to spend 100,000 shillings. And therefore, and we'll only be able to generate 60,000 from our revenues. So how do we deal with the 40,000? Now, if you have such information in advance, it puts you in a better place to help you deal with it, rather than being faced with the costs or the bills that need to be paid today, and the money is not there, and therefore it's a crisis. So financial management and doing making cash flows out and working with those cash flows will help you move from a places of crisis to a places of planning, to a places of anticipating things and just being ready for everything as it comes your way. If for absolutely you will not be able to meet an obligation as it's falling due, then it gives you the time to speak to whoever you owe that obligation to, and to actually start finding alternatives and just letting them know, other than talking to them after the fact of things have happened and you have not met an obligation, you have not kept your word as a business, and therefore your goodwill is being eroded. So cash flow management can be as basic as can be, and can help your business plan the area of cash in a way that will help you have better relationships with both customers and suppliers, and for your business, building credibility for your business. Faustina, I am done with the presentation. I am happy for you to guide on the way forward, and I'm happy to take questions.
Thank you. I didn't think you were done, but yeah. Okay, that's great. That's great. All right. We still have 5 minutes left, and with these 5 minutes, I have 3 or 4 things that I need to do before we let you go at exactly 11:30, or let me say 11:40, depending on how fast we're able to do this. The first thing is there's so many questions that people have for you, Thomas. I'm not saying anything that is directly, targeting Family Bank for now, but maybe they'll be coming in. So what we're going to do is we'll quickly tackle a few of the questions that have been shared. Thereafter, I would request the audience to please turn on your videos if you can. We want to have a photo moment, a Kodak moment. And then remember I had mentioned that at the end of this webinar, we're going to have some gifts for you, for the most attentive participant, and you're going to ask a question. The first 2-3 people who respond are going to win something out of it, and then from there we will have Family Bank come in and just give a vote of thanks, because all this is happening because of their doing and their love for SMEs. So we're going to start with the first, which is tackling a couple of questions. So I'll start with Patricia Kuria's question, which was, what would you advise when it comes to having an emergency account for businesses in order to cater for low seasons? Remember, you mentioned you're in a dark season, and our government is predicting an even darker season. So what advice, Thomas, would you give in managing an emergency account, or even how do you then start setting up an emergency account when money is just, let's say, very little for you to even start saving as a business person?
Thank you. Now, again, financial management is the forte of being able to identify and understand this. So when you have done a forecast for your business, and you can actually see that either one, you have some surpluses, that are coming up in certain periods, then what we call the emergency account comes in handy. And ideally, what you do is you just putting out some funds in a place where you cannot access them on an everyday basis, but on a specific needs basis. So for these emergency accounts, I think the first thing is, as a business owner, you must determine what emergency is. I've seen entrepreneurs or businesses that will come up with an account where they will say, this is what we are saving for a rainy day or for an emergency. But then the money gets utilized in ways that are not emergencies. So you need to determine, first of all, and put in your policies, what are we putting out this money for? And then this is where now you get in touch with our partners, Family Bank, and find out, we have some money that we want to put aside. What product can you give us? Can you, or do you have to offer where we can put in this money, and so that then it is not eaten away by inflation? And again, this is where you have now the plan that you have, or the policy you have around the emergency fund comes in handy, because you may have to put this money away for a period of time. It could be 3 months, could be 6 months, for example, it could be a year. It just depends on the product that then the bank has on offer for you, and how then you utilize that. So you need to know what to do with it. And then now, from your projections of your cash, you can actually tell. Now, when you compare your actual performance every end of the period, which would be monthly, against your plan, you can actually start telling whether you actually have those surplus funds or not, so that then you can start locking them away. So an emergency account is of good help, is a good idea or way of thinking. You can look at it as an emergency account, or you can even think of it as a growth fund, a place where you put in money that then you can utilize for growth opportunities. You can use it as a stabilization fund. In different organizations, we call it different things, because some you put aside some money so that the months that become lean, then you have something that then you can run to and utilize.
Oh, thanks. You've actually tackled 2 questions, because the second question was about expansion funds. You've answered that very well. Okay. So I'll just move to the next question, which is, they're asking about the future of accounting. It seems this profession is under threat. Are we headed to a period where accounting practices will be more of an outsourced consultation service rather than employing accountants in the office?
I like that question. This is somebody has seen a trend what has been happening. So every profession develops in some way or other. So the accounting profession, first let me say, is not under threat. You will need accountants until when there's no more businesses. However, what is changing is the role of accountants. The traditional role of accountants of maintaining records, of we called it bin counting, is what is going away, is actually being taken away, because we see the softwares that are there today in the market, and what we talked about are slowly evolving into business tools, where entrepreneurs or a business is able to generate their invoices, receive payments, and do a lot of things on these tools. And these tools are able then to do for you some basic accounting in the background and give you even some reports. So you can do a lot without an accountant today. However, the accountant still needs to step in at the end of that, because we now move into the financial management place of it. So once these tools have done the accounting piece of it, you will need the services of an accountant to actually come and reconcile and ensure that the reports that you're receiving are complete and are accurate and are in line with the agreed accounting standards. Then 2, you need the services of an accountant now to help you start doing the analysis and the interpretation of what you get out of it. So what we are saying is that the accounting profession or the service that is required by businesses now is more at a much higher level, is slowly moving away from recording transactions to analyzing and interpreting accounting data, which has been done by the system. So yes, we are seeing a lot of more outsourced accounting happening because there's many businesses today that are able to in-house record their own transactions in the accounting systems. And all they need now is an accountant coming in periodically to close the books and to produce the reports and help now with the analysis into the financial management. So we are actually seeing a trajectory heading that way. So for the accountants who are probably listening to me, this is a good time to start honing your skills in the area of financial management so that you can then be more relevant in the days to come.
That's a fantastic ending to that statement. In the world of ChatGPT, there's no industry per se, especially if you have what you offer is more of a service. There's always a moment of being under threat. So you'd rather stay ahead of the curve. Thank you so much for that, Thomas. So in the interest of time, I can see there are two people who have raised their hands up, but I'm not sure if they'll be able to turn on their mics. I'm waiting for the team on the back end to advice on that. That is, I can see Janet has raised her hand, and I think there was another person called Karen, but I'll let you know if it's possible. So we do have another question, and it's just asking about what are the 3 top issues SMEs are facing that can be solved by a proper financial management. I think a lot of the presentation is basically addressing that. So please allow us not to respond to that question right now, but we will share the notes with everybody who's been part of the session. And then there's another comment about how can I join Sandbox? We will share our contacts at the end of this webinar so that you can join Sandbox and get support from the Sandbox community. Oh, Janet says she accidentally raised her hand. It's okay. It happens to all of us. All right. So that was a fantastic presentation from you, Thomas. For some, especially if you've been an accountant, you've been doing all these things for many, many years. But then again, here's an expert who's giving you a whole different perspective that is meant to help your business, yeah. So sorry, I just got distracted there. What I want us to do is to have a photo moment, a Kodak moment, but I'm also being notified that only the panel would be able to do that. So I'll pause it there and we'll do it at the end. So now what I want us to do is to welcome the Family Bank team to share their vote of thanks, because it's already past 11:30. We want them to give their vote of thanks, and then we will ask Thomas and Thomas, even myself, we will share a couple of need to know information regarding what is also happening at the Sandbox and how you can plug into the services that we have to offer. So I will welcome Jackie. Jackie, are you with us? Yes, Jackie.
Yeah. Thank you very much, Faustina.
All right, so Jackie, please proceed.
Thank you very much. I'll just quickly introduce myself. My name is Jacqueline Carita. I'm the business manager, business club at Family Bank. And before I say the vote of thanks, allow me to quickly just talk about our business club and what it offers to our customers. So when our business club was started, we thought of what does a business person usually need, and we thought of, instead of having Family Bank just be the bank where either they're coming to us for loans and we are going to them for asking for deposits, that we needed to offer value additions that can help them as they grow their business. So that's where our business club was started, and that was in 2014. And we thought, what better way to offer solutions or help our customers? So we have 4 pillars that guide our business club, one of them being learning. And of course, this has been tackled today very well. So we thought, I know every day can be a learning session for all of us. We go through experiences, but we thought, how about having formal sessions like this where our customers tell us what is ailing them in their business, and we find experts like we have today, Thomas, taking us through the financial management essentials for SMEs. We've had so many sessions, again, based on what topics our members, our club members ask, from HR management, digital marketing. We've had sessions on even just how to keep their books, compliance and all that. So these are sessions, again, driven by and requested by our members. And so that was one of our pillars when we started that business club. Second was, we know that our net worth, I think that's what we are told all the time. So we wanted to give our members an opportunity where they can come together, they can network, they can share ideas, experiences, where we can even have business people mentor others who have just started businesses. We know we have members who have been in business for 20 years or more, and there are those who just started. So we wanted that platform that allows for that. And so we do have networking sessions where our members can meet and just, like I said, share ideas and even have customers within themselves. Today also was a great opportunity for networking. And I did see that on the chats. I saw people actually putting what they do and offering their services. So these are the opportunities that we thought would be very important. And thank you for those who shared. We still have time. If you have a moment, you can put on the chat, tell us who you are, what business you do, and even put your contacts so that someone who may need your services may be able to call you. And then again, you gain a customer that way. The other pillar was business exposure trips. We understand that sometimes it's important to move from where you are, maybe your town, your city, and go to another city or town and see what other businesses in the same line, or even just get ideas of new businesses that you can start. So we always have business exposure trips. It could be local, it could be international. So we are actually having a trip to Europe. For example, this year, it will be October 25th, where we're going to 4 countries in Europe, again, just to benchmark with the SMEs out there to see how our SMEs can better grow their businesses, where they can learn. And even, like I said, you can even see another opportunity that you can start when you're back here. Again, it's important to have several sources of income. So that's why we always encourage that, benchmarking and business exposure trips. And finally, of course, we have the last pillar, which is additional benefits that we offer to our members. For example, if you're a member and you're joining us, if you go to a branch, depending on where it is, they already know that this is a business club member. So there are few perks, like you don't have to line up, you don't have to queue, you're served immediately. For example, you also get invites to we could be sessions or breakfast and dinners that the bank is hosting for our customers. So those are the other additional benefits that we have. I know because of time, I won't really talk too much about, I'm very passionate about the business club, so I can really talk a lot, but allow me to just leave it at that. But again, we are still open for our business trip to Europe. So if you are interested, I will share my number and email, so you can reach out to me so that you can join us on this amazing trip. So for the vote of thanks, I would like to first start with our customers. Thank you so much for joining us. I know you've taken your time and about an hour and a half to join us. We don't take that for granted. I've seen customers all the way from Mombasa, Murang'a, Kakamega. I've seen someone saying they're from Uganda, Rwanda, and Kigali. So thank you so much for taking your time and joining us this morning for this session. And I'm very sure that you've learned a lot. I have too. And we'll continue inviting you for more sessions. I'd like to say thank you to our finance expert, Thomas Warira. Thank you so much. What an inspirational, amazing, thought-provoking session. We really appreciate that. And we thank you. And I'm sure we will be having other sessions with you as we continue. I'd like to say thank you to Daniel Azenga, Head of SME and Asset Financing at Family Bank. Thank you so much, Daniel. He's an expert, as you've seen. He is the one in charge of our SMEs. And so even this business club falls under him. So he's my boss, in short. So, but I thank you for everything, and thank you for giving us that good introductory remarks. I'd like to thank our moderator, Faustina. Thank you for taking us through this session. That was an amazing job. We thank you. We don't take you for granted. Appreciate you always. Of course, to our team at Wild, team at Family Bank, there are some people who are on the background, but they've done a lot to make sure that this event today, this session today is successful. From the marketing team at Family Bank, we have our customer relations, customer service team at Family Bank. We have the Wild team, again, making sure that this recording is being recorded live, making sure that everything has gone smoothly. I want to say thank you so much to you and for everything that you do. Again, we don't take you for granted as well. So for that, again, to everyone, I hope I've not missed anyone. I'd like to say thank you for taking your time this morning. And as we continue having this session, we encourage you to continue joining us. And as most of you have asked for the presentation to be shared, I know we will. We have your email addresses, and we will share the presentation, and then we can continue our conversations. Thank you so much. Faustina, back to you.
Thanks, Jackie. We are really looking forward to the trip. Yeah, if you're a business person and you want a moment to just go to a different country and get to see what people within your sector are doing, Jackie has just given you a great opportunity that, in my view, I would not ignore. And since it is part of Family Bank, just know that the rates are definitely negotiated on your behalf. So please reach out. And for that matter, because I can see most of the comments that were also coming in were requesting for the contacts. So we'll share the contacts for Thomas. In fact, Thomas, just for your knowledge, there was someone from Eldoret who was asking how they can access your services. So please, we will share your contacts as well. We'll share the contacts for Wild in case you need additional business support services. Remember, we are part of a wider Sandbox community, a community that has an expert to help you in your various needs as a business owner. Another critical thing is that for the sake of us making sure that some of these webinars or events that we're doing are adding value to you based on the needs that you have, we've shared a feedback form where you can tell us more about how you found this session and what else you'd like to learn in the process, because this is going to be part of a series of sessions that we will be running. So the next one that is coming will be on October 3rd, and that will be with regards to Customer Service Week. You know, Customer Service Week is coming up in the next month. So there's going to be a very interesting topic for you to learn from. We're still in the process of fine-tuning it. So we'd be happy to see you there as well. We'll have customer experience experts actually talking about how you can leverage this customer service week to be able to add more value to the clients that you actually serve. So I don't know if there's anything else that I might have missed. No, not really, but please fill the feedback form. The details are on the chat. It has been shared by Joy Waweru from Wild International. Just check your chat and you'll see that. Click on the link and give us your feedback regarding this particular webinar. Another thing, as I've been mentioning, is the fact that, you know, Sandbox, Family Bank, all of us, we have one common goal, which is basically to support SMEs. Just a quick notification is that we will be having an SME launch on the 31st of October, whereby we'll be sharing insights in regards to the trends and the opportunity areas, especially when it comes to pension, that affect SMEs moving forward. Another thing that I've been asked to mention is about we had the big baraza as Sandbox a few months ago, and we'll be hosting an event that helps businesses such as yours be able to leverage on NSSF. How can you look at NSSF as a silver lining when it comes to opportunities for your employees? In fact, you may even found out recently that you can even borrow against all the savings you have made through government. which I think is a very exciting thing. So finer details of this will also be shared to you via email. With that, I don't think I have anything else to add, but just to say thank you so much for honoring us with your time, with your attention, sharing questions, feedback. In fact, I saw some of you were even, conversing on the chat box, posing questions, and somebody from the audience actually responding to them. So we are very grateful for that. That means it's been an engaging session as we go on. So to finish off, we will finish off with the trivia, and the best 3 people are going to win the prize. So if I may take this time to announce the prize is you're going to get a 30-minute free consultancy service from Thomas. 30-minute financial management consultancy service from Thomas. So he will call you, and you can now ask all the burning questions that seem to be affecting your business. So the first 3 people to answer the question that will be put on your screen correctly are the ones that are going to win it. So I would like to ask the Wild team on the back end to please share the question. The question is, Family Bank offers technical assistance for businesses. Remember when Daniel Azenga was talking, he had mentioned all the things that Family Bank does. So just out of curiosity, is it true or false? Can see responses coming in. So the first 3, fortunately it's an issue of time, is Jasper Ochieng, Helen Mary, and Faith Njihia. Congratulations. Woo! So you win yourself 30-minute free consultancy service from a financial management expert. And the financial management expert is the one and only Thomas Warira. Please share your details on the chat as well, and somebody from Wild will reach out to you so that you can organize how that session is going to go. So congratulations to you. Yeah, so I'll just give you a few seconds, you write your details, and then from there we can close the webinar. Anything else, any burning issue that you felt was not tackled, please email us. You can even share in the feedback form. We will be able to respond to you. Otherwise, thank you to everybody who has participated in this particular webinar. I'm so grateful to my panel. I'm so grateful to Thomas, my goodness. We see you around Sandbox, but sometimes we sort of even underestimate how much knowledge you have. So I'm going to amplify your profile even further going forward, because that was a very fantastic presentation you shared with us. We will definitely share the same with all the participants for this particular webinar so that you can always refer. And if you feel you're still not understanding, we are available to you to assist you in any way you want. Sawa. So with that, I give you back your time so that you can continue with your day-to-days and to jipate tukijenga inchi. We continue building the nation from wherever you are. Those in Rwanda, in Uganda, continue building your own nations as we build Africa moving forward. Sawa. For the panel, we have a Kodak moment, so please hang around just very briefly. We have the Kodak moment, and then now we can officially close the webinar. For the attendees, kwaherini sana and good luck.
It's about building relationships. When you walk through our doors, you're met by a familiar face who knows and understands your financial needs. Our Visa cards are globally accepted and have enhanced security features for safe and secure transactions. At Family Bank, we believe that our customers are part of our family. We guide, we advise, and we grow you. Juu family ni kujengana. Njoo tukujenge. At Family Bank, we are more than just your bank. We are your friend, your ally. With our internet banking and Pesa Pap, you can transact from anywhere and at any time. Our Mdosi Junior account is specially designed to help parents teach their kids about saving. At Family Bank, we provide excellent quality of service to our customers because at the end of the day, we are not just a bank. We are your family. Njoo tukujenge. At Family Bank, we know that banking is about more than just transactions. It's about building relationships. When you walk through our doors, you're met by a
You have the Kodak moment, and then just a disclaimer, there are a lot of contacts that have been shared on the chat. Guys have been sharing their email address, their telephone numbers, and their businesses. It's very, very important information. I'm sure this is directly targeting the business club, because quite a number of people have asked how they can join the Family Bank Business Club. So Jackie, you have quite a number of leads. Congratulations.
Thank you, thank you. That is good. So we'll be able to, is someone able to get the chats and share with me? I think it's possible.
Yes, it is. It is.
Yeah, okay, good.
So please, I would kindly please turn on your videos so that Madam Cynthia can